Okay, so I want to make another little cascading, if you will, of the previous video regarding what an alternative trading system is. There's a massive systemic problem that I don't think anyone is aware of as far as legislation or fiduciary roles goes. And that is the problem, the conundrum of what is the real count. Now, the question has a question within itself, which is define count. This could be shares. This could be trades. This could be NBBO, National Best Bid and Offer. I mean, you can really, anything that is a spoke of what is a stock. So how many shares? What's the value? Market cap. And a lot of these things can be answered within a very short amount of time, typically. But we have an even bigger problem than that, which is the first item that I have mentioned. Because typically, if we go off of shares, in this case, share count, if we think about how many ATSs exist, either explicitly or implicitly, you have different layers of layers. For example, options, return swaps. Okay, and a lot of these conundrums, I will get to this here in a second. But a lot of these alternative trading systems will typically have the underlying allocated to. This is a typical operation, not always, but a lot of times. But if we define things like FTX, which is a crypto-based exchange, it's a crypto-based exchange, but it trades equity. So actual stock. If I pull up TradingView here, and I look up AMC Entertainment, there is an entry made for it on FTX. You can't see it. There we go. It's loading. I don't know where it's at. There it is. So it exists and typically follows what's going on, but this is an example of market fragmentation. This is an industry term that haunts a lot of people, a lot of professionals, a lot of regulators. It is a big problem. This typically happens during times of excess liquidity and decadence of market structure, we'll call it. But the point I'm getting at here of this prompt of what is the real share count or market cap, during times of volatility, this creates problems. Because there are so many different sources of technically real data, so if we have FTX right here, we have the NYSE here, we have options, we have ETFs. They're all corresponding to this question up here. The conundrum is that there is inherent latency throughout all of this. It may not be much. I don't even think measuring it in microseconds, or excuse me, milliseconds, is even appropriate here, which is what traditional networking, anything, network nodes, network clusters, this is the go-to metric, and I don't even think this suffices. But there are billions, if not trillions of dollars residing on this metric. And between all of these different fragments, I want to call it shrapnel at this point, of market structure and market plumbing that exist, I don't think even the professionals, I didn't spell that right, I don't even think professionals can answer this. So if professionals within the industry can't answer this fucking question, then how are we supposed to expect regulators to answer this question? And what happens when our regulators move to companies like Goldman Sachs? For example, the Fed, the chairman, I forget what the gentleman's name was, but back in 2007 or 2008, the person who stepped down from the role of the chairman of the Fed was recruited by Goldman Sachs. There aren't any ways to answer these questions with 100% certainty. The bigger problem is if you can't define a share count, or shares outstanding, or float, how the hell is anyone supposed to have real answers on things like short interests? Who's supposed to know what their margin balance is? What about settlement times? In the instance where you do have single-digit percentages of a float left that aren't marked as sold short, how are 2 to 3, sometimes even 7-day settlement times feasible for determining if even the float exists? These are questions no one is fucking asking, and no one is able to. Not even the regulators. I will say this again. If you want to squeeze, dig!